30th December, Friday, one more day and it's gonna be the end of 2022, and today you really must watch this video. Loads of content and we have some changes for 2023, so stay tuned and enjoy this. I think the US bonds may fall another 10 to 15%. Now of course to you it's like, so what? No, US bonds and the stock market is actually pretty related. So it means that if I expect the US bonds to go down by 10 to 15%, that means that the equity market may go down by also 10 to 15%. This is why am I telling you, you need to watch this, alright? Let me tell you more in great detail. Let's watch this. Make sure that disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now, before we go on, right, we have in September, we saw the Queen has passed on, alright? Now, the King has also passed on too. Now, I'm not referring to Charles, I'm referring to Pele, the Brazilian football player who made soccer the beautiful game, has passed on as of this morning at the age of 82. He has scored more than 1,000 over goals in less than 1,000 foreign games, right? Apparently, he is being crowned as a king of football because he has 3 World Cups under his belt, alright? So he is a scorer. When he played the Samba football, it was really a beautiful game. And at the age of 17-year-old, he already become the world champion. All right. So he's not a very big size player, 1.72, slightly shorter than me, and he has scored so many goals in the professional leagues. All right. So less difficult to get this video when you're just primary school time, but nonetheless, right, he left a great impression on me, and I really think that rest in peace. All right. So hopefully you can see a new king in the market soon. All right. All right, moving along for 2023. All right, now recently I've been doing the spin the wheel lunch with Cal thingy, and we have great response. And of course, the food we go excellent. But the thing is this: for 2023, there'll be some changes. Okay. Now, today the code is lunch. Okay, so you don't need to spot it. I'm informing you today that it's lunch. And today, if you leave the word lunch in the comment box, all right, okay, tomorrow we will do the spin the wheel, right? Tomorrow, special, we'll invite 4 people, 4 winners will be selected for the lunch next week, which is the brand new year, okay? But then again, from next week onwards, right, there'll be no more code, okay? I will not leave any more code. Now, what we need to do is this, okay? For my video from Monday to Friday, as long as you leave a video comment, like example, you went through the video and then you just comment something about it, or example, if today is on bond market, you just say, okay, I like the bond market segment, or you don't like the bond market segment, and if the lengthier you write is better, alright, then I will pick your name. So that means that now, every day, Monday to Friday, as long as you leave a comment that's long enough, probably like 2 to 3 sentences, we'll pick your name out, and then after that, we'll put it as one of the chance to actually get a chance to go for lunch with me. So you must leave a comment, okay, on the video that you watch. And I say again, it have to be at least 2 to 3 liners, alright? If you put a single line, but it's lengthy enough, why not, okay? So all the winners that we select from day to day, I will upload the names on the MAO video so that you will see whether what you write itself, is it enough, okay? Alright, so take note, today you still put the word lunch in the comment box, but from next week onwards, please leave a video comment. Thank you very much once again. Now, last night, the Dow Jones recovered 345 points, the Nasdaq up by 271 points, wow, and the S&P 500 up by 66. So, of course, you can see across the board, Microsoft up by 2.7%, Google 2.8%, Apple 2.8%, Amazon 2.8%. Hey! Amazon, Microsoft, Google, Apple all up by 2.8%. Very suspicious, right? That's why I say market can be very easily manipulated. Okay, of course you may say it's just coincidence. Okay, never mind. Tesla up by 8%. Hey, not bad. 121. So a couple of days ago, I was telling you this Tesla is a buy at 109, and I tell you that you can buy if you're doing a speculative trade. And I did mention that about 115 to 120 would be a good time to take profit, because I believe that the next round Tesla is going to go down below $100, okay? So what led the market rebound yesterday? There are a few reasons. Let me share you now. The first reason could be this. The initial jobless claims came out to be same as the forecast, so there was no surprise. And the number is actually higher than last week's. So because of that, right, people feel that, okay, we have a bit of economy pulling back now because more people are jobless, so it's good. Okay, so that is one reason. The other reason is because Elon Musk tell people that, you know what, don't bother about the stock market. It's crazy right now. And he's still able to stay afloat, but of course the word margin call is still on the book. So that is another reason, or maybe because Tesla is going to come out this earnings, the number of cars that they sell next week. So people are buying in case that the number come out better. But you ask me, I don't think so. All right. The another reason is because of this. Biden have signed the 1.73 trillion funding bill that includes Ukraine aid. Maybe this one helped. But then again, if this happened, the question mark will be where the money come from, right? Someone must pay for it. So I think the real reason why the market went up yesterday was this. Now the 2022 tax loss harvesting deadline is looming. I mean, it's already have happened actually. Right, it's that 28th of December, okay? That means that you actually need to sell off the stocks that you're losing money by 28 December or aka 29 December yesterday in Asia time. So this is the last day to sell stock and losses for tax loss harvesting. The last day is not December 31st, okay? Because that is a settlement date. So that's the reason why I felt that if you can recall now, on 28th of December, the stock market came off, right? Because they are selling their thing away. So on 29th, which is yesterday, they buy back because, I mean, they cut away their losses, but they need to buy back to put in a portfolio, right? So what could happen is like this. So that is how I feel that why the market went up. But again, if that's the case as well, right, are you telling me you're going to buy more? I have my doubt on this. I'll tell you more in detail, all right? But at least we solved this side. So I really feel that you should be very, very careful with the current situation now in China. All right, apparently China faces the deluge of COVID deaths in the first Lunar New Year without the pandemic curbs. So in short itself, right, all the while, last 3 years, China has been curbing, ensuring that the COVID virus doesn't spread across the whole country. But now, the way that they're doing is very different. And this could actually become a Wuhan 2.0. So let's take a look. So apparently, this is from Bloomberg News, yeah? China could see as many as 25,000 deaths a day from COVID-19 later in January because the Chinese are going to celebrate their Chinese New Year, and a lot of people now has going back home, their hometown, to celebrate. But as we know, there are many, many people falling sick, and of course, death is literally every day, right? This is something that you must take note of, and this is coming from Bloomberg News. So the thing is this, they feel that, right, the China regional provinces are reporting much lesser numbers, okay, apparently. And now we have a wide spread to Beijing, Tianjin, Chengdu, Shanghai, Chongqing, Anhui, Hubei, Hunan, all these areas. Okay, so this is something you must take note. This is coming from Bloomberg News, okay? And then they are saying that, right, coming this January, there'll be more deaths coming in, right? But the thing is this. Oops, there's some PowerPoint issue. Just give me a moment. Okay, yep, okay. But we have a bit of problem at the moment now. Let me just do this. Give me a short moment. Right, there's some technical problem here. All right, give me a moment. Let me just solve this. Okay, here we go. Okay. All right, just give me a few more seconds. Okay, here we go. All right, but the thing is this, on the mainstream media from China, apparently it says that out of 31 provinces, there are only 4,100 cases and there's no death. What? Huh? Doesn't make sense, right? And the thing is this, they're saying that in Hunan, only like 109 cases. Oh my God, come on, man. This is crazy. I mean, of course, in just one day, but it can't be. You can't have like in Hunan 109, in Fujian 338, and Hubei 358. I mean, this is really doesn't make sense, really, right? So all these things tells me that there's something wrong here because just the pictures alone, look at it, the number of people falling sick and the number of people passing on. How can that be, guys? So how to trust the local media statistics? So what we need to do, we need to get external. But apparently now China is going to ban all this photo taking, video taking, right? So we just saw that the Chinese COVID carriers has landed in Milan, and the crazy part is that up to 52% of the people are already diagnosed with the COVID virus. This is absolutely incredible, alright? So rather than you think that I make it up yourself, this is everywhere, more than 50%. So this is really insane. So look at the statistics from China right now. Just 20th of December, they say there's no death, but we all know that there were many because from Reuters itself, right? China COVID accelerated to 9,000 a day. Oh my God. So how can we trust? Who should we trust? The Reuters, the Western news, or what happened in China? So seriously, let's watch what we have on the video side. All right, let's take a look. Now, take note here. If you remember back in Wuhan time itself, back in 2019, all right, you mentioned on 31st of December, the Wuhan Municipal Health Commission says there's a cluster of pneumonia in Wuhan. There's a new novel coronavirus, but then again, it didn't really hit until 5th January to 10th January, whereby the WHO comes in and things get a bit serious. Then after that, by 12th January, China publicly shares the genetic sequence of the COVID-19. And then the official says the case in Thailand, the first case outside China. Okay, what I'm trying to say here is this. Look at it. The timing is incredible. It was today's 30th of December, and we're going to approach January 2023 very soon. And the way the Chinese side is doing and reporting really doesn't make sense here. And of course, it just looks so alike. Don't you think so? So let's see what the main this channel from India, what they have to say. Let's hear this out.
We are all better prepared when it comes to the health infrastructure. But why should we suffer hardships because of China's indifference to the world's fate? There is one immediate decision that can be taken. Nations must prevent flights from China until it has brought its pandemic under control. Second, test everyone with a Chinese passport, not just a ticket from China. I've said this before, and I'm not afraid to say it again. We have nothing against the people of China. This is just public safety.
All right, so you can see the haters is quite incredible. I don't think that China is trying to deliberately infect the world with coronavirus. But undeniable now, by allowing people to start coming out from 8th of January onwards, right? Seriously, this is going to be very crazy. And this flight to Milan has more than 50% passengers having the virus itself. So you cannot imagine how many people will be coming around or going out from China or going to different part of the world in by January to February period. This is going to be very scary. And if things really repeat on that note, then of course the supply chain, the economy, all these will be affected, right? So that is something that I really don't understand. And that's why now Blackrock is pretty confident that they are not very optimistic of the 2023 economy. This is their latest 2023 global investment outlook. And they are pointing to the leading indicators, and most of them are showing that the corporate earnings are going to get hammered. Okay, this is from Blackrock itself. Okay, and they find that the expectation don't yet price in and even a mild recession. So that means that the current pricing right now is not even near a mild recession. All right, so if there's going to be a full-blown recession coming in this 2023, then of course the corporate earnings will get hit. And I already been saying this for the longest of time, and I said that things will get very scary. And if you remember, back in 2019 to 2020, I also covered the same thing, and I was reminding people that to be very careful, because once come January, there could be a sudden cliff falling experience, and we saw it in 2020 where the market just keep on diving. So I really feel that way, and of course I have my numbers and statistics and charts to show you. Now this is from Goldman Sachs Investment Research. Okay, they are now saying that the estimate US recession probability with more than 47 forecasters, and apparently Goldman Sachs says that they don't think so. Okay, Goldman Sachs don't think so, but majority of them, at least 65%, feel there will be a recession. And if you look at it right now, from Goldman Sachs Investment Research, they are saying that, right, there should be a few more rate hikes between 50 basis point to 25 basis point. Then maybe by September or July period, we could actually see a pullback or at least a flattening. Then after that, it may reduce by end of 2023. Okay, so the thing is this, that means that Goldman Sachs is expecting the Federal Reserve to continue to raise more rates, which is kind of like everybody's expectation. So if rate goes up, then naturally it's out that the yield will go up. And if the yield goes up, the bond price will come off, right? So that is something that I want to share on this. Now, the boys are either very serious that they are hedging or arbitraging their trade, because look at it. This is incredible, guys. This is really insane. This is 2021, okay? 2021 all the way to 2022. This is the CBOE Put-Call Ratio. And now we are at 2.4. Oh gosh, guys. 2.4 is a very high number because we have not seen this ever. The last time we saw this in 2019-2020 was somewhere around here, about 1.3 to 1.4. Then the last time we saw one more time was here itself, is about here in 2016. Then after that, during the Lehman Brothers, even the highest point here was about 1.4 area. So now where we are, this 2.4. Okay, so what does it say? That means that it's either that they are very worried of the US economy, so that the boys now are basically ensuring that they are pretty well hedged. So if the equity market pulls back, at least the put call will be able to compensate. But on a flip note, it could also mean that, right, they really know that the market could crash the next 2-3 months, and they really want to make some money out of it. Right, there's two ways to look at it right now, and for me, it's like both of both, okay? I felt that it's going to be both, and this is really not a good sign if you ask me. So if you look at the 10-year yield right now. Now, yesterday, because of the jobless claims, all right, so what happened in the Biden administration? We saw the yield coming down a bit, okay? But this is a expected pullback that I told you yesterday. And I said that once it crosses this point here itself, once it crosses the 3.9, things will really change, okay? And I'm pretty confident that we will see that figure coming soon, right? Maybe by next week or so. And when that all happen, that means that the treasuries, right, will go down. So let's look at the treasuries, okay? Now the treasuries is now at about 100. And if you look at it, right, guys, okay, this is the first support we gathered from 2014, and you can see the market have broke it previously, and now it slides below it. It's currently now below the MA 200. That spells a lot of negative bearishness. So if you look back all the way using my typical conventional way, this is the last low. This was the so-called confirmation low, like a double bottom in 2010 and 2011. So this figure is 88. Oh gosh, voila! So now the thing is that now we are at 100, and this is going to go down. If you're going to go down to 88, that means it's going to go down by at least 12%, okay? At least 12%. So if the bonds market come down by 12%, what will happen to the equity market? It will follow. All right, it will follow, because that means that lesser people is able to trust what's happening right now in US. And of course, if people are very worried of the corporate earnings, no one will actually buy into the bond. All right. So if you look at it, right, happened recently, right? Let's take a look here. You can see now on the last few days, the bond price just jumped down, literally, just jumped. It's like they're in a big hurry to sell. I mean, we all know that there is some ongoing now about the yield going up again and the interest rate environment, but it really doesn't constitute to a jump down in prices, okay? So if you're talking about the near term, I suspect that yesterday's rebound is just going to be temporary. And if it doesn't cross 101 next week, then a pullback to at least 94 is really possible. And that will be another 5% from where we are right now. And that means the equity market dropped by 5%. It is really possible. So in my opinion, you should be watching the bond and the yields very closely, because it has proven that it works with the S&P rather closely right now. And then, of course, Biden continued to dump oil. Oh my God. Now, despite the expectation of the drain is ending, all right, Biden released another 3.5 million barrels from the SPR. So now the total inventory is the lowest since 1983. Oh my God, that's right here itself. So Biden, what are you doing? Why you are doing that? Well, I don't know. Right, maybe it's some reason for that. But the oil price didn't really move down much. And of course, let's take a look right now. This is the oil price. From the highest point recently to the low end here right now, we have about 144 trading days. Now, the last time we saw this was back in 2020, when crude oil price came down all the way, and of course from $65 to zero, it took about 74 days, okay? So the thing is that we're having double now, and the thing is that after that, we have a very strong rebound. So if you were to ask me, yesterday the crude oil was down only marginal, that's about less than 20 cents. And that was based on 3.55 million barrels of oil. I can tell you this, guys. I'm very, very confident that commodity prices is going to shoot up next year. Okay? And one of the things that leading it itself will be crude oil. So I'm going to stick my guns here. I think that, right, when the equity market fall, crude oil could come down. It may test again the 70 mark for a short moment, if you ask me. But once it crosses the $80, which is the 38.2 Fibonacci, I think that it will be able to see the 100 mark very easily. So if you were to ask me right now, I will buy at $70 or lower. And then my first profit level will be at $80. And if $80 hold, we can actually see 100 coming in. This is no joking matter, guys. You really must take note of that. This is a very, very important asset because if you remember, it actually repeats before in 2007 and 8. Right, it happened before. So this could be a big issue, and I think that that will probably give Biden the big thumbs down. And of course, if he have done that now, maybe we may need to change someone here. All right, and apparently it's all right. Some people are saying that there is a chance for Biden, right? Maybe he might be stepping down next year. You know, all these things, all the foretelling thingy, forecast thingy. So I don't know, I'll leave it there, but I just feel that someone must take the blame, yeah? So let's look at the charts right now and see what we have for today, shall we? Okay, let's take a look. Now this is the Dow Jones with my KFC level, and I mentioned that the Dow Jones is now really bouncing around this area here, and this is not a good sign because that means that the market is not going to find a direction. So I was just telling people here, look, now would it be possible that the market expect the put and call options to change the other way around and the stock market go up by 10%? But with the current situation right now, with the earnings come down, the yields are there, I kind of see why there will be a 10% upside. So in fact, it's right. To me, there's a higher chance of a 10% drop instead, okay? So this is why I'm very concerned right now. So watch this number, guys. 33,031 on AIMS platform. This figure has to stay. So you saw that the 2 days ago, it went below, yesterday recover. So today, what's next? So watch this carefully. Now the upside itself is still be stay at 34,000. The downside itself is 32,550. But once this thing goes below, I suspect we can see further selling. Now, if we use the 5% theory, which is the 5% marker, all right, I can just show it to you a little bit here. Okay, this is the highest point, and we use a 5% reduction method, right? Okay, now what do you take a look, guys? Take a look. So the 5% method, as you can see on the screen right now, we are just basically about 11% away from the all-time high. Okay, so even if the market drops from this point now at the 90% mark by 10%, it's just only barely at the bear territory. Okay, so that's why I felt that there is a higher chance for the market to pull back all the way down to the 80% mark, and that's below 30,000. Now, we've seen this before back in September, and the market rebounded in October. But if their earnings are not able to come in, and the current situation in China is developing, and we suspect that Apple, Tesla, and many companies, all the chip makers may not be able to produce, all this should be able to bring the market down lower. So upside, again, I repeat, is about 34,000. The downside is right. The first level to watch out for is 32,334. That is the mid-drift between the 90% and the 85%. So this will be the first support. Once the market break here itself, then the market can see it coming down to 31,411 level. Okay? All right, so let's look at the TWB chart for today. Let's take a look. Okay, a moment. I think we need to do this. This should be the right one. Let's go. Okay. So guys, from the TWB chart right now, if the bar stays red today, we're going to have a zebra formation. Zebra formation means that there'll be a big movement coming soon, okay? Now, of course, today is the last trading day. I don't think the market will really go crazy tonight. So it's most likely is the next few days of when the year began. Now, of course, there's a traditional says that, right, if the market start the first 5 days that's negative, usually the market will end negative for the year. Now, of course, this is like works about 80%, right? But of course, there are also 20% that it doesn't really follow. So we'll watch this very closely. I'll cover this next week. But if you ask me right now, the market is resisted at 33,177. That is my pivot one. And when it does that as well, right, you can see on the 15-minute chart it's clearer. Once the market couldn't stay above it and is below OP and below pivot 1, usually we will see some selling. Now, why is it holding right now? Because KTR minus 1 is right here and MLP is 33,066. So I believe that this will be the level that the market will rest for tonight. It means that if it comes down, that is where you stop. And of course, if that happens, we will have a zebra formation. So the support level for BNB will be critical, and that's 32,816 level. My KSI and my KRW both are red. So basically means that the selling pressure should be there whenever is required. Now, for Nasdaq yesterday, because of the strong rebound across the board, which I told you that is quite interesting, all up by 2.8% exactly, I found that some manipulation here. And based on my big boys indicator, they are sellers. So that means that the market went up not really because they are genuine buyer, but it's just basically technical buyers. So I'm going to put my support level here for BNB, and that will be 10,800 level. So as long as the Nasdaq stays above 10,800, okay, maybe we can see a recovery because it's CCRY, and the first target is about 11,028. But if the Nasdaq pulls back further and breaks MLP at this 10,825, then of course it's quite clear that we will see the market coming down to about 10,700 area. Now do note the BNB support level extension minus 1 times 1 is actually at 10,511. S&P 500 right now, you can see that because of the Nasdaq recovery with CCRY, so it's actually considered bullish for now, but that means the market must stay above OP. Now OP for today is 38.46 and now it's 38.34, so that means below. Now if the market ends red tonight, oh gosh, that will become a single yellow, then the support level will be at this 37.61. It will have to be watched carefully. If the market break this level and close below, then I'll be very confident to tell you that we will see 36.30 in the market. So watch out for all this, yeah? Now for China A50 today, wow, incredible. It has touched the MA200 but failed to stay above and is marginally above the MA30. So that means it's a very strong confluence around this area. And if you look at it again, guys, I'm going to bring you back to history. Let's take a look all the way to 2020 before the pandemic. Take a look, guys. This is really incredible stuff. Let me show it to you right here. You can take a look here. Okay, you can see that, right? Back in 2020, 2019, before the thing goes very bad and ugly, you can see that the market was also doing this. It was basically squeezed all the way. Then after that, in this January, when the thing break out, right? Whoa, look at the China market. It just jumped down, all right? It just literally jumped down. So if you would ask me right now, I felt that the thing is similar, okay? So watch out for this. This is not going to be a good sign. And of course, if once the thing gets pretty nasty and there's no control, right, I believe that will spread to the equity market. So guys, this is going to be a big movement. You need to watch out for this, okay? All right, so let's continue and let's look at Hong Kong. And now the Hong Kong market has been pretty resilient. The BNB resistance level is at 19,749. That is a very strong resistance. In the last few days, the market just couldn't really stay above it. Let me confirm that this 749. Yep. The current price now is 19,785, slightly higher. So if it stays above the BNB RL, we can still see it potentially going to 20,805. But if you ask me, if there's no chance or little chance for the US market to go higher, then watch out for the resistance here. If the market pulls back below this figure, which is 19,749, then a pullback all the way down to the support level, which is at about 18,693, it is really possible, okay? So watch out for this, yep. Now DAX has just opened, and DAX, you can see we have a new BNB yesterday. KSI is red, KRW is red, so there will be some selling pressure. But if the new BNB is here right now, that means that we have to wait for a while. Let's see which side it's going to take. If it breaks above the BNB RL, which is 14081, we can see going up to 14,144. But if the market breaks the support level, then 13,655 will be next. And if you ask me once again, we'll watch MLP very closely, 13,969. It has stopped, rebounded earlier as well. Let's take a look at the 5-minute chart. You can see it's better. Here we go. You can see that, right? Once the market opened this afternoon, it bounces off the MLP, it came to KTR -1, stopped there brilliantly, rebounded, and now it's just hustling around the MLP. So as long as it stays above MLP, not so bad. But if the market really goes below OP and below MLP, we can see the price coming down all the way. And if it breaks pivot 1, we can really see the BNB support level, and that's about 13,866 zone. Yeah. Okay, so that is the DAX. And of course, let's look at crude oil. Crude oil has tried to rebound every time, right? This is the BNB support level at 76.84. And I told you before, KSI is green, so anytime it pulls back, usually there'll be a rebound. And for 2 consecutive days, the market rebounded near to the BNB support level. See, this is how powerful our system is. So as long as the market stays up above the BNB support level, okay, no problem. But if you want to go up higher, it has to break the $80 mark. And with the Biden still dumping oil, there's going to be some downside. But if you ask me, right, if crude oil can come down to $71, it will be a steal, okay? So watch out for this, yep. I missed out Nikkei earlier. Let's do the Nikkei, a quick one. On the Nikkei, this is what's happening now. The Nikkei is down right now, and it's now going to test again the BNB support level, and that's 25,952. Now let's look at the dollar, the quick one, to see what the dollar has to say. Well, let's take a look. A quick one, moment. Here we go. Now the US dollar is down a little bit today. It's down by about 0.1%. Because there's a bit of, this is where the support is, and I strongly believe that once there's some support and people realize this is how we're going to move, but if the bond market is going to come down, that will give a what do you call a negative picture for time being. Okay, so now watch the dollar carefully. If the dollar really continue to strengthen, okay, to 104, that means that the yen going to be lower in value. That may actually help the Nikkei. But now, if that's in the other way around, then the Nikkei will likely be coming down, and watch out for 25,305 mark. Okay. All right. So let's look at the other market, which is the gold and silver. Let's take a look. Now, silver market is now hanging around at the BNB RL level, which is at $23.51. So as long as it stays above that, the market can go to 24.86. KSI is green, KCX is nothing, so it's very bullish for time being, and I expect that 24.86 will be touched in the near term, okay? And for gold, well, I already mentioned to you guys, the BNB RL is at 1810. As long as the market stays above 1810, there should be about $5 upside, and now it's already happening right now. But if you're asking me for today, 1825 is a key resistance. It has to break 1825 for it to see 1850, all right? If not, then once it goes below this figure, the BNB RL figure, we can see pulling back down all the way to the BNB support level, and that is 1765 zone, okay? All right, last but not least, it will be the Ethereum and Bitcoin. Now, Ethereum is down a little bit, trading below the BNB support level at this 1200. So once it stays below, there's a very good chance by today we'll see 1166 done for the Ethereum, because usually when the market goes below the BNB SL level or above BNB RL level, within 3 working days, we should see the profit. So it is possible to see the profit later, yeah? All right, so that is Ethereum. For Bitcoin, now Bitcoin is steadily dressing downwards, and today is the 3rd day. Now it's supported by pivot 2 at 16,048. So 16,408. You see, the low itself is 16,412, means by a couple of dollars. But the point is this: now it's trading below MLP 16555. Hence, therefore, if the market stays below 16,400, we can see 1622, then 16,220. Yeah, KSI is not really a piece helping it, and of course the KCX also telling you that the weightage is on the downside. So all this information can only be found in TWB system. Yep. Okay, right. Of course, some people are asking me now, will there be any currency sharing today? I'm going to share with you a little bit here and there. Hope you can like it itself. Now, for dollar yen, you can take a look here. It has broke below the trend line, and I mentioned to you guys, if the KSI is red and the market breaks the uptrend line, usually there will be some selling, and it's really happening right now. So it's because of the US dollar, most likely case, and you can see that now it's broke below the pivot 2. That's why the selling is going to be pretty easy. To show it to you, right, I look at the 15-minute chart, you can see this better. So once the market go up and then pulls back below KTR -1 and below pivot 2, you can just safely sell it down. And the first target profit, it can be KTR -1 or -2, it doesn't matter, but as long as you make some profit. Okay, this is going to be very, very important lesson. Yep. Oops, sorry, my bad. and that will be the dollar yen. Let's go and look at something else like a pound, and pound is pretty sideways. I'll give it a miss. The euro is trying to go up again, but the dollar strengthening, I doubt so. And last one, Aussie dollar is climbing up. Now, I already told you guys Aussie dollar will be going up because I believe that commodity prices will be leading it. So my view is that Aussie dollar has break above pivot 1 now, which is a very bullish classic trade. We can see it going all the way to 0.6884 level. Yeah, this is my view here itself for this Aussie dollar. Okay, guys, I really hope that you enjoyed this 2022. I hope that I've done a great job too. If you can also leave a bit of comment for me to see whether you appreciate me, or if there's room for me to do more changes, to update myself more, or whatever not, just put in the comment box, okay? But remember, today's special code is lunch. Put it there and you'll be selected for tomorrow's spin the wheel lunch with Kel thingy. Alright, this is Kel signing off. Have a great time. I'll see you next year. Bye-bye.